Welcome to StockMarketPundit.com, SMF Street. Once again, we talked about that S&P and the volatility having resistance up there, and it pulled back, and we're taking a run toward that 1150 again. Now, as all MMTs understand, that was at 3680. Our bid is going down here where we already had the bid out. I'll cancel it all. So it's done live here. And because I'm a master at trading that, knowing how to price that put option. So basically, I have a monthly chart up here. The bullish thing about this S&P is that we're finally going above that 10-month moving average. However, I am going to put bids out here. They were $36.80. And as I've been telling people each day, all our MMTs is that we're going to put the bid, just like we had earlier, and we're going to put this bid out here at $15.50. And we'll put a buy of 3 contracts at that first stage. And what is this trade really about, people? It's about it going up into the 100-month moving average, and if that holds as resistance, I'm pricing in the S&P contract below the market based on that move running up and hitting resistance. And that gives me the best entry out of anyone on the street. You want to know the reality? There's the bid. That's the reality. That's the closing price. That's the monthly chart on the S&P 500. That upper end of 1150, I'm pricing in the lower market in case we go up and it fails. Then the move will be working big time. However, because of my wholesale entry being the king of wholesale and options prices, that's different than the day trading stuff. Keep that. Hey, if it doesn't work, come back here, learn how to get wholesale. Learn how to price options the right way, not the stuff you've been led to believe. That ain't going to do you no good. This is a market maker operation on these contracts. And I'm down here below the market, right there. And we got that buy order out, and we're going to start scaling that lower end. So basically, we are going to hit the buy button here. We will buy this on CBO. Sorry, I'll have to put the price in again. 15 point, we'll go 70 cents because we don't want to miss it. Now, what we'll do is we'll hit buy. We'll put that order out here in the marketplace. There it is. That's below the market. And it tells you right here that that's below the market, 1150 put, 1570. The reason behind our MMTs trading that at that wholesale price is because sooner or later, it's a very bullish S&P trend. Don't get me wrong. However, in the very short term, we get wholesale to that resistance level. Our risk is very minimized. It's not like the people who speculate and hold all these contracts way down to my entry, because that's what they do. So basically, that's that 1150 put. And the monthly bullish chart on the S&P is right here. That's the bull case, and you are. It's beautiful. But once again, last time we undercut this this line, this yellow line, that's 100-month moving average. That's where we sold through. That's that resistance level, and that's why we're pricing that option below the market that way. Because our entry is so wholesale to that move that we can always come out at even money or make a little profit. But if it stalls here at that downtrend at resistance, we get locked in wholesale on the 1150 put option right here below the market. And the order is open right here. You can see it. There's no hunky-panky. 1570 is the live order. Not only that, that's wholesale bid into that resistance. Once again, MMTs, you've been given a gift on how to trade index options at wholesale market prices based on upward resistances, getting below the market, getting wholesale.